All right, welcome to this week's market report welcome to this month's market report with the month summary of the month of June, what happened in June of 2023 versus June of 2022 and over the last 12 months. Have prices gone up? Have they gone down? Has market activity increased or decreased? Is it a strong seller's market? Is it a buyer's market? Are we expecting a recession? All of these questions are going to get answered in this report. So the purpose of doing our weekly market report, as you know, is so that you have all the information that you need in real time so that you could use real strategies going into the market and have those strategies apply appropriately, both from the seller side and the buyer side. The reason for doing the monthly market report is because it gives us more of a bird's eye picture of what's happened and gives us a trend of where things are going. If we get caught up in the minutia only, then we'll be in the ups and downs. Those are important for strategic offers in a given period of a market and strategic pricing of a property in a given period of a market. But if you want to know the trend of what's happening, you need to back out a little bit and look at year over year monthly summaries. So that's why we're doing this report. So let's dive into these numbers and see what happened in July of 2023 versus July of 2022. All right, so the number of new listings June of 2023 versus June of 2022. We are in July now, but we have to look at the June numbers. So June of 2023, the numbers of listings between the 2 years, it was pretty much half, which has tended to be the what we've seen as we do these monthly market reports. We see that inventory is basically at about 50% of what it was last year. And then the number of sales, again, June of 2022 was almost 400. We do 210 here. So it's a little bit over half, but it is significantly lower. And we can see that in the market activity. We can see that there's been, a 40%, and at some times a 40% decrease in market activity year over year. And a lot of times the media uses that market activity number, so 40% decrease in the market, to spread the fear of a market crash coming. And the fact of the matter is, the market activity or the number of transactions has nothing to do with home values. It's supply versus demand that determines home values. So how do we know supply versus demand? We look into the other numbers. So the first thing we look at is days on market. If a property is sitting on the market for longer, that means that buyers, there either aren't buyers out there, or if there are buyers, they have more to choose from, so properties are taking longer to sell. And you can see in June of 2023, we're at 22 days. We've been between 27 and 22 days since the spring began. June 2022, we were at 21 days, so no significant change there. If you look at the months of inventory, June, July, and August of last year, it was 2 months worth of inventory. This year, it's been 3 months worth of inventory. And keep in mind, the way that we determine a normal market, a neutral market, is 5 to 6 months worth of inventory. Usually that 6-month mark is that neutral market. And what this means is that if no more new properties came onto the market, how long would it take to sell the current inventory? And if there's a 6-month inventory, that's a good idea, just like a neutral market. Anything under 5 months is more of a seller's market because properties are selling so quickly. We're at 3 months, so we're still in a strong seller's market. Anything above that 6-month mark, that would be a buyer's market because things are taking longer to sell. That means there's more supply than there is demand, so that would be a buyer's market. So we are certainly in a seller's market with regards to that aspect of things. Median sales price. What's happened with median sales price? Well, first of all, let's go through our monthly explanation of the median sales price. So the media likes to say that median sales price, when prices are coming down, our median sales prices are coming down. That means property values are coming down. And this is not necessarily the case. So how median sales price is determined is you take all of the sales that occurred in a given month, and the number that falls right in the middle of those sales is the median sales price. So for example, this is a small example, and there's a reason statistically why this number is used. It keeps numbers from, like, extremely high numbers from skewing where the stats are going. It keeps low numbers from skewing where the stats are going. So it's a valuable number to look at because it lets us know what the market is buying at, but it doesn't tell us property values. So what do I mean by that? Well, let's look at month one here in this example. We have 1, 2, 3, 4, 5, 6, 7, 8. We have 9 transactions. In month one, you can see the numbers of these transactions: 3 million, 2.7, 1.65, 1.5, 500, 350, 275, 225, 220. Okay, so the median sales price for this month was $500,000 because that was sale number 5. 1, 2, 3, 4, 5. 1, 2, 3, 4. So it's right in the middle. So the median sales price this month was $500,000. Okay. Month two, same number of transactions, 9 transactions. You can see 4.25, 3.5, 3.25, 2.5, 3.95, 3.85, 395, 385, 350, 315. All of these sales values are higher than these sales values, but the median number was 400,000. So based on median sales volume, 400,000, month one had a median house price of 500,000, month two had a median house price of 400,000. That housing market just declined by 20%. That did not happen. Every house that sold was more expensive than month one, but because of where the median house price sold or fell, then theoretically, based on that, housing values have gone down 20%. So what we think when we hear that the median house price has gone down by 20%, we think that a $400,000 house, we're not going to get that house for a $500,000 house, we're not going to get that house for $400,000. That is not the truth. You're still going to pay $500,000 for that $500,000 house. It's just the median value of what the market was buying had come down. So in a situation where the interest rates go up, if people were previously looking at a $500,000 house and their interest rate increase made their buying power, they were only able to afford a $400,000 house, well, now everybody that's buying is going to be buying lower priced houses. That does not mean that they can now get that $500,000 house for $400,000. It just means that these $400,000 houses are going to have a lot more demand. Okay, so it doesn't indicate value. You have to determine value of a property, buy the property, run the market analysis on that property, see what the property is worth last month versus this month, and see if that property value came down, not median sales price. Okay, I hope that makes sense. So with that in mind, median sales price for June 2023 was 1.26 million. June of 2022, it was 1.2 million. Okay, so it went up $60,000. That's not that significant of a difference, because it just means that that's where people were buying. What is more important is days on market, months of inventory, things like this that show us the demand for the properties. Another item that we can look at that gives us good information is percentage of the sales price to the list price value. So for example, in June of 2022, properties were selling for over 102% on average of the asking price. June of 2023, they were over 101%. So that's down about 1%. Okay, so does that mean prices are coming down? Well, not necessarily. It could mean that sellers have adapted to what the market and what the buyers being more conscientious, so they got more accurate with their pricing. They could have gotten to a point where they were pricing it accurately, so buyers weren't doing that. It could be that buyers again weren't willing to pay as much over asking price. It doesn't mean values came down, it just means that buyers weren't appreciating it as quickly, which is what we've seen in this market. We've seen that appreciation has slowed down, but prices haven't come down. Okay, so I hope that makes a little bit of sense. So what do we expect? Are we expecting prices to go up or go down? June 2023 versus June of 2022. So is market activity up or down from June of 2023 versus June of 2022? It's certainly down. Okay, so we're certainly in this area. So then we look at months of inventory. Are months of inventory over 6 months? That would be a buyer's market. No, the answer is we were at 3 months of inventory. So that puts us down here in a seller's market, which means that demand is higher than supply. So if we're in a seller's market, even in a down activity market, we are going to expect increased appreciation. So normal appreciation is anywhere between 3 to 5% per year. We expect that to be a little bit higher because we are in a seller's market. Okay, so that is what we're expecting price-wise. And if you say to yourself, well, what about the upcoming recession or the economic issues and so on and so forth? Well, we can look at that as well. Or what about the interest rates? We can look at this as well. So this graph right here looks at interest rates over time versus housing prices over time. And then I added in the little purple areas are times of recession to see what happened to prices. So this is our pricing line, and you can see that pricing has continually trended upwards. Continually, no matter what the interest rates are doing. Even when interest rates were at close to 18%, housing prices were trending upwards. As interest rates came down, housing prices still continue to trend upward. The only time that housing prices have made a significant drop since the early 1980s is when we had the 2008 market crash, and this crash was because of the housing industry. It was because of poor lending practices, predatory lending. It was basically they were just giving money away. And then all of these qualified loans came due, and all the subprime lending and so on. So the market crashed because of that. That's the only time we've seen a significant decrease in housing prices. So for those buyers who are sitting on the market waiting for interest rates, we've talked about once the interest rates come down, there's going to be a flood of buyers, prices are going to shoot up again, so it's going to cost you more. But there are buyers that are also sitting on the sidelines waiting for the prices to come down, waiting for, I heard it the other day, waiting for pre-pandemic prices. And the fact of the matter is number one, in Northern Virginia, we live in a bubble, so we're probably not going to see that happen just because we have a protected area here with a lot of income and the government and so on and so forth. But number two, historically, there's no real evidence of significant price drops except for 2008, and we're not in that same situation. These loans that are out there now, they're well qualified. All these people that own houses, if they get in trouble and they need to foreclose on their house, they're not going to foreclose, they're just going to sell the house because there's so much appreciation. They have so much equity in these properties. Properties are not upside down right now. So we're not in the environment where there's going to be a huge price drop, even in the event of a recession, because you can look at these purple marks here. Recession, prices just kept going up. This is the only recession where prices came down. So there's no real true expectation of prices to come down significantly in the next at least several years. And what that means is if you're waiting for those prices to come down in the next several years, and they continue to appreciate, even if they're appreciating only at 3% per year, then 3 years from now, this $600,000 house is now going to cost you almost 10% more, so almost $660,000. And then if prices come down 2%, yay, you just saved 12 grand, but it cost you 60 grand to get there. So, if I give you a check for $12,000, would you give me a check back for 48,000 or for 60,000? That makes no sense, and that's kind of what's happening right now. So, just think about it, look at it historically. If you are waiting for the market to crash, let's have a conversation. Let's kind of walk through it logically and see what's going on. Obviously, I cannot predict the future. The best thing I can do is look at the past and see what that tends to indicate may happen in the future. But I would love to have a conversation about it. All right. Okay. So overall, June of 2023, decreased activity, but demand is still higher than supply. So we still expect prices to continue to appreciate. If you have any questions about this, please feel free to let us know, and we will see you on next month's market report. Have a great month.